U.S. market futures are slightly higher this morning as investors anticipate today's interest rate hike decision by the Fed.
So the central bank is expected to announce its first interest rate hike of 0.5 percentage point in more than 2 decades.
This affects a lot of folks. So the Fed is worried prices are climbing too high after a more than 6% surge just over the last year. So officials are hoping to bring down demand by making it more expensive for all of us to borrow money. The Federal Reserve helped the U.S. economy through the COVID-19 pandemic by dropping rates to near zero. Now the Fed is facing a new challenge, crushing inflation without bringing on a recession.
It's hard to catch up when you have to go very fast. It's also hard to catch up when you actually have to push monetary policy to a tight setting.
Coming up with a so-called soft landing could be difficult in part because the job market is booming, and increasing the interest rate will likely change that.
This is a situation where wages have moved up at the highest rate in a very long time, and people are able to quit their jobs and move to better paying jobs.
The unemployment rate in the U.S. is at 3.6%, according to the Bureau of Labor Statistics, which is considered full employment by the Fed.
They have to push up the unemployment rate. And in the past, when you've pushed up the unemployment rate, you've almost never been able to avoid a full-fledged recession.
The central bank raised rates by 0.25 percentage point in March, but some say that wasn't soon enough.
They wanted to start late because they wanted to see the economy get to full employment. But I think that's going to turn out, in retrospect, to have been a policy mistake. They should have gone a little bit sooner in terms of removing monetary policy accommodation.
The Fed has said rates would need to rise nearly 2 full percentage points this year, with additional rate increases next year. So think about how many people that is affecting. So Jerome Powell, the chairman, says the U.S. has been soft landings, has had these before, and a recession is not inevitable.
There are some other economists who disagree, but I guess we'll have to wait and see. It's also interesting because they just did a rate increase in March, so they're moving pretty quickly here.
Yeah.
You know what that means when it comes to borrowing. Thanks, Marilyn.
I think it means higher interest rates.
Yeah.